What's going on, guys? In this video, we're going to be a little all over the place. We're going to talk about the upcoming Jackson Hole meeting for the Fed. We're going to talk about the potential for rate cuts, where inflation has been, the likelihood of rate cuts. It's becoming less and less likely, but still more likely than not, according to FedWatch. We'll talk about what's going on with AI. There's definitely a lot of fear recently. People saying that it's a bubble, and we'll see what else we get into. But the Jackson Hole event is kicking off in Wyoming, in this little barn here is where they're going to give the meeting. But as of this article, it says there's a 79.2% chance of a rate cut, a 25 basis point cut, and 20% chance basically of keeping rates the same. And we'll look at the updated FedWatch tool, see where that's at, see if it's changed from this article. And the minutes was just released on Wednesday, yesterday. Most policymakers still believe it's not the right time to cut rates. And as I showed you guys the other day, PPI has been rising dramatically. It came in way over expectations, and we'll look at that in a second. I think that's one thing that the Fed is focusing on, and this is from a producer standpoint. Usually it precedes other inflation readings. And in our last meeting, we did have a descent, the first descent of the scale in more than 30 years. Michelle Bowman and Christopher Waller voted against holding rates. They called for a cut. So we don't have all the Fed members in complete agreement about holding rates current. More and more of them are starting to see the reason for cuts. And the minutes also caution that there's still considerable uncertainty about the timing, magnitude, and persistence of the effects of the increase in tariffs. As said here, it may take a few quarters for the full impact of tariffs to make its presence felt in the economy. From an importing goods standpoint, to the price being passed down or not to consumers. And Bitcoin has also been showing a little bit of weakness. It's nearly back to 112,000 as we approach this Fed event, the Jackson Hole meeting. And as said by Ryan Lee, the chief analyst at BitGet, Bitcoin's drop was a snapshot of rising nerves in the market, tension surrounding the speech, causing fear spikes. Now letting the narrative settle and liquidity return might pave the way for a rebound. If this 112 holds until the speech, it may be the setup for the next leg of the bull run rather than a reset. We need to hold 112,000. And this article also mentions CPI, but it doesn't mention PPI, which is much more alarming. But CPI rose 2.7%, far from the Fed's 2% target, not going in the correct direction, going away from the 2% target. And because of these inflation reads, CPI, also PPI, which we have talked about recently, this has changed the probabilities of rate cuts from 94% of a cut a week ago. And Andrei Dragosh, who's the head of European research at Bitwise, believes that the first interest rate cut of 2025 may become a massive market catalyst. If we get this cut, we may be expecting more on the horizon. And the moment you see further rate cuts by the Fed, the curve will steepen, which implies even more acceleration and U.S. money supply growth. Rate cuts may be the most significant macro development to support the continuation of Bitcoin's rally, at least until the end of the year. And like I showed you guys yesterday, I'll leave that video at the end screen, but we talked about the 4-year cycle and how every cycle throughout Bitcoin's history, throughout Bitcoin's entire history, every time Bitcoin has ended on its peak year, hint, hint, 2025 is our peak year if you follow the cycle, it always tops out right around November, December. And I do think these incoming rate cuts line up with that. Now we'll get to these publicly traded companies that are holding Bitcoin, but first I wanted to stay on the subject of potential for rate cuts and the Fed meeting and all that stuff, and show you guys that our last read for PPI saw a massive tick up. The forecast was 2.5, we got a 3.3. It is not going to the Fed's 2% target, and this has decreased the odds of a rate cut, but the market does still see rate cuts as the most likely thing to happen. Although it is getting closer and closer to 50-50, it is not there yet. The likelihood of rate cuts is still higher than no rate cut, with a 71% likelihood of a cut in September, the 17th of September meeting. We do have some more inflation reads before this meeting, so it'll be important to watch those. And then we have a 28% chance of leaving rates the same, not cutting, not raising. And when you go to end of year, the market is still anticipating 2 rate cuts or 50 basis points worth of cuts. We'll see how these odds change over time with incoming inflation data and jobs. Are jobs going to be weakened, which might help us get cuts as well. But going back here, corporations continued acquiring Bitcoin and ETH. And back in June, there was 124 public entities holding Bitcoin. Now we have 300. We have reached 300 entities holding Bitcoin, of which public companies are 172 of these. And Bitcoin in treasuries just keeps growing. There's now 3.67 million Bitcoin locked away, whether it's in a public company, whether it's in these spot Bitcoin ETFs, whether it's held by governments or held by private companies. And while all these companies are loading up, we're seeing Bitcoin on exchange near its lows. It's at a 2.2 million Bitcoin on exchange. It's just hovering near its lows here. Despite this pullback, we didn't really see a huge tick up in Bitcoin on exchange. I do think we're going to set new lows over the rest of this year. Now, it does look like Bitcoin is on its way to break 112,000. If we can't hold this, if we can't hold these lows here, we break this, I do think the market will react to the break, and we will probably test this roughly 108 area, which has flipped from resistance to support. You'll see that we kept moving once we broke from it, tried to hold it as support. We didn't hold this area as support, and we dropped. It became a resistance point, remained a resistance point until we reclaimed it, and then it became a support. Once the market saw that we established this 108 area as a support, we bounced in very nicely from it. Now there's a chance if we don't hold at 112,000, we test 108. If this 108 doesn't hold, I think there's a good chance we come down and test our $100,000 200 MA. Yes, the 200 MA is now at $100,000, and Bitcoin is $112,000. Think about that. Do you guys remember back when it was 40,000s and people were concerned that these spot ETFs are just going to bring a ton of manipulation? Bitcoin isn't going to have a great cycle. Here we are at $112,000. Remember when 100,000 was a psychological resistance? Remember how it felt when we first broke 100,000? Bitcoin has come a long way, and I don't think it's over yet. Now, we do have some AI fears of a bubble. We had an MIT study claiming that 95% of companies see no returns from generative AI. And Sam Altman warned of a bubble. We got some pretty big drops. Palantir dropped nearly 10%. Nvidia dropped 3.5%. And Altman drew a parallel between this AI frenzy and the 90s .com bubble, when any company could put .com in their name and they'd see a massive rally despite being unprofitable. Not only unprofitable, but in many cases pre-revenue. A lot of these companies weren't even making any revenue, let alone anywhere near profitability. Things are different this time. A lot of these AI companies are in fact profitable. So if their valuations are high, they will grow into them. Whereas with the internet bubble, a lot of these companies weren't even making revenue yet, weren't even money-making companies, or even pulling in any revenue, pre-revenue. That's not to say we're not in a little bit of a bubble and valuations aren't a little bit stretched, but they do have more of a reason to be that way rather than the 99.com bubble. And all of this is happening right before Nvidia's earnings. Maybe there was a reason that they did this at this certain time. But you know, these are companies that are profitable, that are growing their revenue massively. They are growing into their valuations. Some are a little stretched. But I mean, look they're expecting a $45 billion quarter in terms of revenue, a profitable quarter. Look at it a little over a year ago. They were pulling in only 26 billion only, and their EPS was in the 50-cent area. And going back a few quarters more, they're pulling in 13 billion and their EPS was 20 cents. I do think a stock like Nvidia is a buy on a good dip, potentially on a dip to the 50 MA. Maybe look for some gap fills too, potentially 160 if we get lucky. There are definitely gaps to the downside, many of them. And valuations have gone a little stretched. There has been a lot of excitement about AI, a lot of future growth priced in, we could say. But having said that, these companies will grow into their valuations. They will keep growing revenue massively. Their EPS will keep growing. Their price to sales and price to earnings will come down to a better ratio as they continue to grow revenue and become more and more profitable. I mean, look at Palantir, for example. It's got a 243 forward PE, a price to sales of 114. But this is a profitable company. It is pulling money in. It is not burning cash every quarter. And they are, in fact, growing revenue. They will grow into their valuations, but they may be a little bit stretched and may be due to cool down, which in my opinion is a good time to take advantage over the future months if we do see AI stocks continue to pull back, which might play out as a great rotation, as hopefully Bitcoin tops out at the end of the year. If we follow the cycle, if Bitcoin plays out its cycle and follows through, we may see Bitcoin hit its peak at the end of the year, which could be a great time to rotate into hopefully some beaten down AI stocks. But let me know what you guys think. Are you just going to avoid AI plays like the plague? Are you going to take advantage on further drops? Are they still too overvalued for you? And how are you feeling about this upcoming Fed meeting? Are we going to get rate cuts in September? What's the Fed going to say for the Jackson Hole event? Are they going to be very hawkish or dovish? Always interested in what you guys think. It is going to be an interesting week here. And thanks as always for watching, guys, and I'll see you on the next one.